When we created the Model S, we were not merely beholding a vision. We had caught sight of a great profound truth. Tesla established the impossible.
Our team has chosen Tesla Motor to present for the IPO case. My name is Mehrdad and I will briefly present the history of the Tesla Motors, reasons that the company went public, and the use of IPO proceeds. In addition, I will briefly talk about the general process of the IPO. Next, Alireza will talk about major contents of the company's registration statement. Then Peter will follow with the analysis of MD&A and Tesla stock movement. Monica and Andrew will explain Tesla's accounting and disclosure issues, and at the end of our presentation, Peter evaluates the overall Tesla's IPO process. Although the Tesla motor is not related to Nikola Tesla, it is named after the electrical engineer and physicist who migrated from Serbia to the United States to work for Thomas Edison. One of the inventions that Tesla developed after departing from Edison's employment was an induction motor. The motor used polyphase current, which generated a rotating magnetic field to run the motor, a principle that Tesla claimed to have conceived in 1882. The Tesla Roadster, the company's first vehicle, is the first automobile to use lithium-ion battery cell and first electric vehicle with a range greater than 200 miles per charge. The Tesla Roadster uses an AC motor descended directly from Tesla's original 1882 design. Tesla Motors was incorporated in July 2003 by Martin Eberhard and Mark Tarpenning, who personally financed the company until the first series of preferred stock. Tesla has differentiated itself from other electric car manufacturers by having a sport electric vehicle which can run a long range with a single charge and has a sport car high acceleration rate. In addition to developing their own sport vehicle and sedan, Tesla provides service for development of electric powertrain components and sell electric powertrain components to other automotive manufacturers, including Daimler and Toyota. Now I should briefly talk about the IPO process. The registration process of an IPO involves 3 stages. First, the pre-filing period, or quiet period as we call it. During this period, which is the most time-consuming period, the company decides to proceed with an IPO, selects their underwriter, hold meeting, facilitate due diligence, and draft the registration statement. Improper disclosure regarding the company and the IPO during this period could jeopardize the IPO, and that's the reason it is called quiet period. Second, the waiting period is the time period from the time the registration statement is filed with the SEC and the company waits for reviews and comments from SEC. During this period, the company responds to due diligence questions and works on marketing strategies, including the roadshow presentation. Tesla's waiting period started on January 29, 2010 and ended on June 28 in the same year, which makes it relatively short. Third, effectiveness and the post-effective period. If all issues have been resolved, the SEC will declare the registration statement effective. Once the SEC issues the effectiveness letter of registration, the underwriters and the company hold a pricing call, and the underwriters offer the buying stock price to the company in order to sell them to the public. Tesla's effectiveness period started June 28, 2010, and Tesla's stock started to exchange at the Nasdaq the next day. Goldman Sachs, Morgan Stanley, JP Morgan, and the Deutsche Bank Security underwrote Tesla's IPO. In the IPO process, Tesla worked with underwriters and its advisors to prepare a prospectus for IPO marketing process, conduct due diligence, file the prospectus and related registration statement with the SEC, respond to and satisfy the SEC comments to the registration statement, market the offering to potential investors, list the stock on Nasdaq, have the SEC declare and registration statement effective, and finally to price and close the sale of stock in the IPO. Now the question is why Tesla wanted to be a public company. Tesla originally sought public offering to raise the fund for development of additional variation of Model S platform, give additional cushion for the company's fund in case of additional development costs and contingencies. And finally, another reason for Tesla's public offering was to sell 25% of Elon Musk's equity in Tesla. He states that he had all proceeds of selling PayPal in 3 startup companies, including Tesla. He wanted to take some of these assets out of equity market. Elon Musk collectively sold 1.4 million shares on the IPO. As we mentioned before, Tesla Motor launched its IPO in Nasdaq on June 29, 2010. The IPO raised $226 million for the company. It was the first American car maker that went public since Ford Motor Company had its public IPO in 1956. Before Tesla Motors, DeLorean, Tucker, and Fisker all tried and failed with automotive startups. The company intended to use the proceeds of its IPO for working capital and other general corporate purposes, including any unfunded amounts needed to pay to complete the production of Model S. Tesla paid remaining amounts that they agreed to spend on their loan facility with the United States Department of Energy agreement as well. Tesla's other intention to use of the proceeds of the public offering was to fund the development of Model X crossover vehicle. Additionally, Tesla anticipated to fund part of its capital expenditure, including Tesla store expansion, by the IPO proceeds. Next, Alireza will continue with the presentation.
Thank you, Mehrdad. Hi everyone, I'm Alireza and I will be talking about the major contents of the company's registration statement or Form S-1. Before I talk about the major contents of this form, let's go back to 81 years ago and review what happened that led to the creation of this form. In 1929, the stock market crashed. In the aftermath of this crash, which also happened to be during the Great Depression, the United States Congress enacted the Securities Act of 1933. Did you know that prior to the Act, regulation of securities was mainly governed by state laws? The goal of this Act is to protect the public trust and rebuild investors' confidence. It is based on the philosophy of disclosure. All material information that the reasonable stakeholder needs to make an informed decision must be fully disclosed. Some of the major contents of the registration form are the following: prospectus, risk factors, audited financial statements, management discussion and analysis. In the prospectus section, Tesla has provided an overview of the company, overview of the car industry, including some of the current challenges that faces automobile manufacturing companies, solutions to these challenges, competitive strength of Tesla, its strategy to become a global leader, and the risk factors that investors should consider before making an investment. Some of the highlights of the prospectus are as follows. Tesla is the first company to commercially produce a federally compliant, highway-capable electric car. Shifting consumer preferences together with increasing government regulation and incentives will most likely result in significant growth in the market of electric cars. Currently, incumbent automobile manufacturers face significant challenges, including limited electric powertrain expertise and dependence on the internal combustion engine. The solution Tesla offering is high-performance, fully electric cars and advanced powertrain components through a highly differentiated business model. Competitive strengths include ownership of sales and service network and capital efficiency. Tesla's strategy is to use a common platform to introduce new models. leverage industry advancements in battery cells, and also successful launch of the Model S. Risk factors cover 40 pages of the entire documentation, which shows the importance of this part. There are so many risk factors, but to just name a few, we can refer to history of losses, unproven distribution model, and single charge decline. There is a history of losses and at the same time expectation of increase in costs, which will result in continuing losses for at least the foreseeable future. As you can see on your screen, from 2004 to 2008, for 5 years in a row, not only there has been losses, but also the losses have increased every year. Tesla's distribution model is not common in the automobile industry today, particularly in the US. Tesla sells their cars over the internet and in company-owned Tesla stores. This model is relatively new, unproven, and requires a significant expenditure. This could lead to a slower expansion of distribution and sales system. The future growth depends on consumers' willingness to adopt electric cars. The range of Tesla's electric cars on a single charge declines, principally as a function of usage, time, and charging patterns. This could negatively influence potential customers' decision whether to purchase Tesla. There are many risks associated with this investment, but there are also many opportunities. According to Frost & Sullivan, a business research and consulting firm, the base vehicles, which includes electric cars, hybrid electric cars, and plug-in hybrid electric cars, is expected to grow to approximately 10.6 million units worldwide, or approximately 14% of new cars sold by 2015. This is a substantial increase from approximately 1.75 million units, or 3% of new cars sold in 2008. Audited financial statements. At the time of registration, PwC provided an independent opinion on the most recent financial statements of Tesla Motors. To obtain reasonable assurance about whether statements are free of material misstatement, PwC conducted the audit in accordance with the standards of the Public Company Accounting Oversight Board in the United States. In their opinion, the statements present fairly, in all material aspects, the financial position of Tesla Motors, Inc. Now I'd like to introduce Peter. He will be covering the highlights of the company's S-1 filing, including the analysis of MD&A.
Thank you, Alireza. MD&A is the official communication between the management and the public. It usually includes the overview of the financial statement, result of operation, critical accounting estimate and policy, as well as liquidity and capital resources. I will start with the overview of the financial statement. As we can see, revenue increased in 2008 due to the volume production of the Tesla Roadster during the quarter. Also, Tesla increased their production capacity in order to accelerate deliveries of the Roadster. As a result, another significant increase in revenue. Noted that prior to 2010, most of Tesla revenue had been generated through sales in the United States. However, with the launch of Tesla Roadster in Europe in July 2009, sales outside of the United States increased to 56% of their total revenue. Therefore, the growth of international sales is expected as Tesla expanding into other international markets. The research and development expense is in line with the trend of the revenue. Since the commercial launch of the Tesla Roadster in late 2008, Tesla's research and development expense has decreased significantly. However, the expenses are expected to increase again in 2010 due to the development efforts for the Model S, in both dollar amount and as a percentage of the revenue. Explanation for the consecutive losses. The company's current product, the Roadster, is positioned in the high-end sports car market, with a starting price around $100,000. The size of the market is limited. The Model S, on the other hand, is aiming for luxury sedan market and is expecting to generate substantial revenue for the company due to the size of such market. However, the company is expecting to have more losses from operation while developing the Model S. The commercial production of their next model is scheduled in 2012. For the balance sheet, we noted that PP&E increased significantly during 2008 and 2009 due to the expansion of production capability for the Roadster, as well as the development of Model S. This is in line with our understanding of the income statement. The next topic is the internal control and other accounting related issue. In June 2010, the company identified error related to the understatement in stock-based compensation expense for the year ended December 31st, 2009. Part of the stock options should be vested immediately. However, the company used straight-line basis over the term and resulted in this understatement of operating expenses. The amount is $2.7 million, is deemed to be immaterial, and is corrected in the following period. In addition, the independent public accounting firm had identified some material weakness related to the company's internal control. For example, the company did not have formal cutoff procedure in place to ensure the timely and accurate recording of accruals. The company planned to expand cross-functional involvement and input into period and expense accruals, as well as process improvement in the procure-to-pay cycle and analytic in establishing certain cost center accruals to remedy the material weakness. Revenue recognition. Tesla's revenue is mostly generated from sales of automobile and recognized revenue when persuasive evidence of arrangement exists. Delivery has occurred and there are no uncertainty regarding to customer acceptance. Fees are fixed or determinable, and collection is reasonably assured. The inventory valuation. The company valued their inventory at the lower of cost or market. Cost is computed using standard cost, which approximates actual costs on a first-in, first-out basis. The estimate of accounting policy and the accounting policy is in accordance with our understanding of the GAAP. Now let me pass on to Monica for more detail about the SEC comments.
Hi, my name is Monica and I will be presenting accounting and other issues as it pertains to the SEC comments. The first round of SEC comments were provided 27 days after the first S1 form was filed. The issues that will be discussed are based on the preliminary comments. Most comments can be divided into risk, accounting, and disclosure issues. First, the SEC commented on the incorporation of risk factors. They recommend that Tesla should state that electronic matters may be responsible for acceleration problems, as recently brought to light by Toyota's issues. Second, the company should mention that other natural gases may be cheaper in the future and may replace electronic battery power. And third, Tesla should state that there is a risk that the customer buying power may decrease along with the economic slowdown in order for investors to fully be aware before investing in the company's stocks. Concerning the accounting and disclosure issues, first, SEC suggests that financial statements should comply with Rule 312 of Regulation SX. This rule states that the financial statements must be current at the date on which the registration statement is filed. Second, since the company provides customers with the opportunity to purchase with an extended service plan, which will be provided to the customer with additional warranty coverage, Tesla should expand the revenue recognition policy to specify when revenue from the extended plan can be recognized and how much cost is incurred from the services. Third, the SEC recommends that disclosures should encompass more than just direct costs. For example, it should include costs such as accruals for warranty expense, inventory obsolescence charges, charges related to adverse purchase commitments, and delivery costs. Fourth, the SEC commented that the company should explain how to account for convertible note exchange transactions, in which the company permitted participants to exchange convertible notes purchased in February for December 2008. Gains were recognized, and the company should clarify how it was accounted for. Fifth, the SEC recommended that Tesla consider recognizing electronic powertrain shipments as a separate reportable segment. Currently, there is only one reportable segment, which is for electronic vehicles. However, since the company manufactures parts such as battery pack and chargers for companies like Chrysler and Toyota, it is advised that that should be a separate reportable segment. 6. The SEC recommends that the company provide a current dated consent from a public accountant. This must be filed when the registration statement is amended. Last but not least, the SEC also noted an issue on the disclosure that base salaries for certain of the executive officers were increased during 2009 to award them for individual past performance. The SEC requests that Tesla should discuss how base salaries were structured and implemented to reflect each executive officer's individual performance, describing elements of individual performance taken into account. Tesla later disclosed in the amendment that the base salaries of all executive officers are reviewed annually and adjusted when necessary to reflect individual roles and performances in the competitive market. The completion of key projects or technical milestones is also a factor in salary determinations. Because Tesla does not provide bonuses to its executive officers, it views salary as a key motivation and reward for its executives' overall performance. Next, Andrew will further discuss accounting and disclosure issues based on the comments provided by the SEC.
Hello everyone, I'm Andrew, and I'm going to discuss the important disclosure issues of Tesla. In the prospectus summary section, Tesla has introduced their electric commercial car, Roadster, without mention about the battery charging time. As advised by the SEC comment, Tesla has revised the fourth paragraph to disclose that using a 240-watt 40 amp outlet that is widely available in many homes in the United States, charging the Tesla Roadster battery pack to 40 capacity will take approximately 7 hours, which can be reduced to 4.5 hours with a professional installed 17 amp per circuit. This disclosure gives prospective customers a better understanding of this electric car charging time. The second disclosure issue is about the risk factor. When the public has concern about the SEC Elon Musk divorce case, many may significantly affect the company's stock and his performance in the company during that period. Tesla voluntarily discloses in its risk factors section that they do not believe that Elon Musk's personal financial situation has any impact on the company. He is currently engaged in divorce proceedings and previously entered into an agreement which provides that the holdings of the trust, including his shares of the capital stock, will remain solely his property. They do not believe that the divorce proceeding will result in his owning less than 65% of the capital stock held by him, or otherwise result in a material reduction of his holdings of the capital stock. They do not expect the divorce proceeding to have a material impact on his ability to serve as the CEO and chairman. They also do not believe that Elon Musk will have to liquidate a significant percentage of his holdings in order to satisfy any settlement reached into connection with such proceedings. Regarding to one risk factor about Tesla's sole suppliers, the SEC asked Tesla to either affirmatively state that there are other alternative providers and they can switch if necessary. Under the guidance of the SEC comments, Tesla has revised twice in the amendment to solve in this disclosure issue, and it disclosed that they have no qualified alternative sources for most of the single-sourced components used in their cars, and they generally do not maintain long-term agreements with their single-source suppliers. Investors and customers of the company will be aware of the potential risk of a delay on production if supply issues have occurred. There is a disclosure issue in business section, as the SEC comments concern the possible costs of or restrictions car owners may be subject to when disposing of battery packaging. Tesla revised in its amendment to disclose that their battery packs include a trace amount of varied hazard chemicals whose use, storage, and disposal is regulated under federal law. Tesla currently has an agreement with a third-party battery recycling company to recycle their battery packs. If a customer wishes to dispose of a battery pack from one of Tesla's cars, they will accept the depleted battery from the customer without any additional charge. This disclosure will encourage customers to own a Tesla car without worrying about the battery recycling problem. To prevent the fraud of a related party transaction, the SEC asked Tesla to name the certain holders with whom the company have entered into an investors' rights agreement. In response, Tesla disclosed that they have entered into an investors' rights agreement with holders of their common stock and convertible preferred stock, including Elon Musk Revocable Trust, Black Star, and Vantage Point. This agreement provides some rights relating to the registration of their shares of common stock, including those issued upon the conversion of their preferred stock. Let me pass to Peter for the evaluation of the Tesla's IPO.
Thank you, Andrew. The IPO price was at $17. The price raised to $21 in the first few weeks and became stable around $19. As you can see, the graph is showing the 3-month stock price movement after the IPO. After the initial hype, the market back to normal and the stock price maintained slightly above the IPO price. In the other words, the price was not set too high that people weren't interested, but also not too low that they raised less money than they could have. Therefore, we consider the valuation of the IPO successful. We then compare the Tesla stock performance to the market and the industry. The stock return is a lot higher than both of the benchmark, as you can see in the graph. Tesla's IPO process was smooth. It only took 5 months for them to move from the waiting period to the IPO without any major issues. Therefore, with a reasonable IPO valuation and the growth in electronic vehicle market, we believe that Tesla is one of the successful IPO companies with tremendous growth potential. Thank you.